There we go. Connor O'Brien,
goes.
welcome to the Power Hour, man.
Hey, good afternoon. How are you?
Good. How are you?
All's great.
So we got OGIG, OUSA, OEUR. Are you working from home or is that the office? What do you got going right now?
This is office.
I was wondering if that was your wallpaper in your bedroom or something in your home. That's
yeah. I got that too.
Yeah. Got it. So what's new in the markets? What are you guys excited about these days?
Well, what are we excited about? I mean, basically, what we're hearing from people is they want to go this tech pullback. You know, how temporary or persistent is it going to be? And that's one of the things. I think another one is, what are people going to do with the $1.9 trillion that starts to hit their direct deposit bank accounts on March 22nd, March 29th? Those the checks, paper checks go out on the 29th. The electronic transfer begins on the 22nd. So that's kind of a big deal. How much will that money flow into the markets? I think people are wondering. Boring stuff, you know, yield curve, your crowd probably doesn't really care too much about, but OUSA type of investors want that steady eddy dividend growth type of investment.
What kind of dividend yield is it?
Yeah, so it's about 2% with a 10% growth rate.
Got it. So
the
2%.
whole story on OUSA is, you know, if you want to have income that grows while you do whatever else you're going to do in life, your income level on OUSA is going to double something like every 7 years. So, okay, it's only 2 and a bit percent today, but it'll go to 4%, 8%, you know, as it just sits there and grows. So it's not really a trading type of vehicle. It's much more of have a cornerstone of your portfolio that is simple, steady eddies.
Got it. And go ahead. Sorry, we're going to say.
I was going to say what might appeal to your audience. We can talk a bit about that for the people that want that steady eddy cornerstone. But we could also talk about OGIG, where there are 60 plus stocks, an interesting shopping list. People can go look at it. They don't have to buy the ETF. They can look under the hood and see what's in there that's really interesting, because the index methodology does a great job of screening and selecting high revenue growth stocks. And when you look at tech, e-commerce, internet services, revenue growth is the primary driver we've identified, a driver of performance.
Got it. And that's OGIG, the 100 the 1 year return is about 108%.
Yeah, exactly.
And so revenue growth is what you guys are using as your identifier. So Luke, did you just share that just now?
Yep. Yeah. I just threw up on the screen so some of the top holdings on OGIG. I'm on OShares.com/OGIG. It's Oscar Golf, India Golf.
Nice.
Yeah.
So there you go.
So what are some of the bigger ones? Amazon, it looks like. Alphabet. How often are you guys trading this? Are you guys doing like a Kathy Wood daily trades, or how often are you doing that?
It's driven by index rules. So we did a massive amount of research on 10 plus years of history on all of the stocks in these sectors, but then the index drives the portfolio, and it's a quarterly recalc of the portfolio and a reallocation. And so what you see is you get a few names at the top that everyone's going to recognize, but 80% of the portfolio is allocated to names that most people don't recognize. It's so different than the tech sector index trackers, so different than the NASDAQ 100. It's about 80% different. And so, you know, for 2 years, it's owned stocks like Zoom and Meituan and Pinduoduo and Mercado Libre and Shopify, all these names that people start to know now that they're worth 100 billion plus. But the methodology does a great job of finding these before the rest of the world finds them.
Got it. Yeah. And so how do you guys go about finding these things? Like, how do you go about it? What do you do to try to find these picks?
Thousands of stocks that are in it's just called the database in the category potential. They have to be large cap. And then they get included as possibilities if they're in 8 of the right subsectors, from digital advertising and e-commerce to cloud computing and so on. And that doesn't mean they're in a portfolio. It just means that they'll get considered. The financial metrics then determine if they're in or not. So does their balance sheet and profitability measure up? Does their revenue growth measure up? Those that do measure up well are in the portfolio. Then the weighting is very different than typical. It's not generic market cap weight. It's in fact a blend market cap adjusted for the quality of the business, the strength of the revenue growth. So 2 stocks that make it in, one that's got stronger revenue growth, they're both good, but one's a little better on revenue growth, it's going to have a higher allocation, even though the stocks might be the same size. Or I'll pick on another example, Booking.com or Baidu. These are stocks that used to be in. They got downgraded so much on rev growth, they got pushed almost out of the portfolio because the revenue growth helped identify that those businesses weren't doing so well. And so it's active in the sense that the rules influence the portfolio. It's not just generic buy everything market cap weight.
Okay, so let's, and again, guys, if you're just joining us, we're talking ETFs, we're talking OGIG is this ticker specifically, and so the criteria to get a company into the ETF is they either have to be a large cap or have the potential to be a large cap.
Has to be
they need to be into a high growth or one of like the growth tech sectors. And then the stock is weighted not just if by a market cap, so you're basically just owning Apple. It's weighted by how much is the company actually growing. Is that a fair way to summarize it?
Yeah, you've done a pretty good job summarizing. Our website has the entire list of all the stocks. People can go look at them. They can buy the ETF OGIG if they want to own all the stocks. They can select some of the stocks after doing a bit of homework if they prefer to do that.
There we go. And guys, here it is. I'm on the page. I'll drop the link in the chat. But look at, I'm on the page. It has the holdings, and yeah, check it out. 72 of them. I can tab through it.
When you're looking at revenue growth, are you looking at like month over month, quarter, annual? How do you guys look at that?
Yeah, there's a lot of data that goes into that. So there's the actual revenue growth for the trailing 4 quarters, and there's the forward revenue growth for the next 2 years. And so we used the blend of a revenue growth score, and we tested all kinds of methodologies to determine when it was simple and steady as the rev growth score that would identify the better performing stocks. If you look at history, rev growth is a great metric. Think of Amazon for a second here. You look back 10 plus years, it wasn't making any money. You had a whole bunch of people say, well, it's too expensive. Back about 10 years ago, it was trading at 44 times revenue. Now it's at around 5 times revenue. I mean, if people waited for Amazon to get cheap, they'd have missed everything. And so if you look at the stocks now, the 60 plus, 70 plus stocks in OGIG, they're all revenue growth driven stock selection. These are companies that are growing really fast. Here's a simple math thing I just did just before the call. I should have done it years ago. If you're growing your business at 40% a year revenue, like the OGIG portfolio in the aggregate weighted average, if you do that for 2 years, you've doubled your revenue. So if you're growing at 40% a year, you're doubling the revenue every 2 years. Now, that may not be exactly what happens for the OGIG portfolio year after year after year, but the actual rev growth last 12 months across the portfolio, weighted average, 40%. Think of it this way. Amazon, Google, and so on, they are in the portfolio. They weren't growing that fast. So there are other stocks that are, of course, growing even faster than 40 in order for the weighted average to be pulled up to 40.
Yeah. Go ahead, Jason.
Well, I was going to say, if you knew Amazon was going to grow 20% a year for the last 20 years, it would be automatic buy. I mean, high growth companies growing by that kind of growth adds up in a big way over time. What were you going to say, Luke?
Well, I was going to say something that we've talked about on this show many times is that there are a couple market factors that are proven to drive abnormal returns. What one is momentum, right? When the trend is more often than not your friend. Academically, that's been proven in a lot of studies. And then the other one is that holding on to your winners and cutting your losers typically fares better than the opposite. And I think that's sort of as Connor's talking about this ETF, it sort of speaks at the heart of that is, hey, you hang on to these ones that are showing revenue growth. You have a Booking.com, it slows it down, cut the allocation.
Yeah, and that's a tiny piece, one of the smallest positions in the whole portfolio. Let's think of megatrends for a second. Everybody's lived through 12 months or whatever it has been of this COVID sort of shutdown and transformation. Some of the things that you see happening, really surprising when you look at the data. Business to business, forget the consumer for 1 second. Business to business spending on cloud computing and cloud related services is going from $150 billion to $350 billion. And a lot of that money is going to companies that are in OGIG. So it's not just about Amazon selling stuff to consumers or providing Amazon Web Services, AWS Cloud. It's across the whole ecosystem of business to business service providers and e-commerce. Of course, that's growing like crazy. Here's a funny stat for people. the e-commerce percentage of total retail sales in the US versus China. A year ago, China was well into the 20+%, and the US was barely over 10. So the e-commerce revenue growth potential in the US market is huge. And of course, it jumped ahead in the last 12 months, a lot. Not ahead of China, but just ahead of where it was. And so the acceleration is really, really important. But it's not as if people are going to start doing, shopping old style now that they've learned how efficient it is to do almost everything they want to do online. So that's a really big driver. So you got this business to business driving cloud related. You've got the e-commerce driving the consumer spending. And then there's this third thing, which is called advertising. I don't know how much money you guys spend on advertising. You got a great fan base and they do the advertising for you. We love you. Your fans love you. Benzinga's got its own buzz in the market.
Shout out Zinger Nation hanging out with us today.
Exactly. But a lot of companies have to advertise. And that money is more and more getting spent on digital ad distribution channels. It's not just Google. The actual ad spend in the digital space now is much bigger than traditional. So no longer much ad growth on TV and radio and all that stuff. All the ad spend growth is going into the Facebook and Google and everything else like that. So there's another category that's a mega trend. Another one's entertainment. More and more people are getting entertainment through digital channels, not going to the movie cinemas and all that stuff. These are all captured in this OGIG portfolio.
And yes. Go ahead, Jason.
There must be a lot of our holdings in there that we spend money on. We buy stuff off Datadog, off Asana, Slack. I mean, so many of these services in the B2B space we're spending
Salesforce, DocuSign, Atlassian.
Exactly. Yes. So exactly. And Luke, what were you going to say?
Oh, I was just going to say, I was going to throw another idea out there because, again, guys, this is the Stock Idea Show. Connor was talking about how the U.S. has to catch up with China in terms of percentage of the economy that's driven by e-commerce. Russia is even further behind the U.S. So if you want exposure to growing e-commerce market in Russia, check out ticker OZON. That's Ozon Holdings, recent IPO. They're the number 2 player in Russian e-commerce right now. Basically, you got rising oil prices. You've got the whole world moving to more of an e-commerce structure. So it's an interesting stock. So little aside there that kind of prompted me to think about.
Yeah, and guys, we have Connor Bryan, O'Shares, Kevin O'Leary. You guys know him. I think I'm doing a RAS report with him next week. And so they have a bunch of different ETFs. And the way that I'm invested in one of them, and the way that I liked it was that Kevin's looking for companies that, have dividends. It's like, what would your grandma want? They want companies that are growing and have dividends. So I like getting income versus just depending on, stocks going up. So that's how I originally got into the O'Shares stocks.
Yep. And check this out, live portfolio that I share every day, holding OUSA.
OUSA.
There we go.
Yeah,
I promised that you guys I would do an ETF segment at some point this week. We haven't done it yet, but you'll see OUSA pop up again when we do that one.
What about an ETF show like 3 days a week?
Let's do it. Give me a minute to tell people what's in OUSA. It's 100 stocks instead of 500, and they basically are selected because they have strong profitability using ROA as the measure, strong cash flow to debt, and then dividend coverage and dividend growth. And here's the thing about dividend growth. For people that want an income generating cornerstone of their portfolio, of their money, it's not a trading thing. You want to grow your income. If you actually buy something, an investment that has a 2% yield and growing at 10% a year, that income level is going to double roughly every 7 years. So it'll be yielding on your original cost. It'll be yielding 2%, then 4%, then 8% on your original cost. So it's a great way to grow income while just letting it sit in your portfolio. Do the trading that you want with the trading capital, but have some cornerstone that is that stability in the portfolio.
Yep. Yeah. I don't have the dividend yield on this screen here, but yeah, that's a big part of the reason why I got into this one in the first place.
That's nice. O'Leary tells people what he has in his family trust equity allocation, and it's 40% OUSA. He likes the stability of the portfolio performance.
Yep.
Got it. Okay. All right. Any other things on the ETF front we should look out for? I know this GameStop stuff is crazy right now. People keep writing in about that, but I see another person owns OUSA here. ETFs are great. Yeah, ETFs give you peace of mind. So there you go.
OUSA holders.
There's the soundboard. I was waiting for that soundboard, Luke, when you showed your thing. So yeah. So
nice work. You got the sound effects just like that guy whose name I'll let you mention that has been on for about 20 decades.
Jimmy Chill. Yep.
He wasn't on yesterday. Did you see that, Jason?
No, my old boss.
There was no Mad Money yesterday. I don't know why. They had like an impromptu Scott Wapner filled up that hour for some reason. I don't know. Yeah, sort of weird.
I don't know.
Here's one thing I want to throw out as an idea here for people. If they're going to look at the OGIG portfolio and want to pick stocks, one thing they could pay attention to is the stocks that are getting positive revenue revisions. You know, our research shows us that revenue growth is really important. So look at the companies whose revenue growth is accelerating. You'll find a lot of them in OGIG, but I would think that's something that they could look at if they really want to be picking stocks.
All right.
Yeah.
I like it.
Okay. All right. Well, will you come on more often and we can give us some updates and changes in the funds, or if you launch new funds? I feel like you guys do that too as well.
We do.
Yeah.
That's fantastic.
So, yeah. So we got like 6,000 people here. This is the YouTube. We show 900, but there's like, we have different distributions. Maybe there's more. It's probably like 10,000. So they're here.
That's
they're tuning in.
Well, we'll do one another day with me on it. We'll get Kevin on someday.
Yep. Sounds good. Thank you for coming on, Connor. Appreciate it. Again, it's Connor O'Brien, the CEO of O'Shares. We don't bring you just some random person. We bring you the top at all times on the Benzinga Power Hour. Thank you, Connor, for coming on today.
Thanks, Jason, Luke. Thank you.
Yep.
All right. Take care.